Well, most pressing issues in the marketplace, we've got to recognise there isn't just one marketplace. Different sectors are being affected in different ways by what we've seen in the financial markets recently. And the Wall Street, Main Street description is a good description. The pressing issues facing companies largely at the moment are credit issues, credit and liquidity issues. Companies are worrying about whether they're going to be able to replace their credit facilities, renew the credit facilities, or get new credit facilities as they need them to grow or just for working capital. That's the big issue at the moment. We're getting towards starting to worry about the impact that recession is going to have on different companies in different sectors. We look at the workout teams of the banks as a lead indicator of what we're likely to see across restructuring, and frankly we can see it as a lead indicator of what we're likely to see across the whole KPMG portfolio at the moment. And what we're seeing is that the banks are gearing up their departments in terms of capability and capacity to deal with problems. They are between 33% and 50% bigger than they were a few months ago. So they need more capacity to deal with, in their expectation, many more problem loans. And what they're saying to us at the moment is they don't know how they're going to be able to deal with those problem loans. They don't know yet how the liquidity issues are going to settle down in their institutions and whether they're going to be able to refinance, whether they're going to be able to advance new money. And they don't know yet what the interaction is going to be between banks and other types of creditors, whether the many CDOs, CLOs that are involved in senior debt are going to be able to participate in solutions rather than simply crystallise problems. By and large, companies go bust because they run out of cash. If a company is not proactively managing its situation, then they increase the risk that they'll run out of cash and that they will go bust. Proactively managing their situation means understanding all of the risk factors that might affect their performance and their interaction with their stakeholders over the coming 6, 9, 12 months. That means having a really good fix on where they are and having a really good fix on where they need to get to over the course of that period of time. They need to have really good forecasting of cash, the key indicators in their business. They need to understand what their covenants are as regards their relationship with their stakeholders. They need to understand the attitude of their stakeholders and their expectations. They need to manage all of that proactively to be sure that they're minimising the risk to the company that they will go bust.